just under 3 hours now before Finance Minister delivers his adjustment budget. So let's get word from business anchor, that's Devin Murugan, for more on Tito Mbowene's inevitable task. Needless to say, it is a tough one though. Devin, good afternoon.
Yeah, absolutely. Good afternoon. Ahead of every budget, Tomelo, an avalanche of wish lists comes from economists, businesses and other stakeholders. With the economy on its knees, government finances stretched to the limit and a growing jobless rate, remedy proposals to the minister has streamed in as usual. Economist Sifiso Skenjana is with us via Skype to talk to us about what many stakeholders would like to see in this afternoon's adjustment budget versus what is likely to be presented. Sifiso, thanks very much indeed for talking to us. The main focus of this budget, Sifiso, is exactly what the title suggests, an adjustment to the way money is prioritized in February, and an adjustment according to projections necessitated by COVID-19. So anyone wishing for structural reform or policy reform, presumably this afternoon, might be expecting too much. What do you say?
Hello, Devin. And I think it's an important point, I think, to emphasize that this is an adjustment budget and therefore it is not a new budget. And all of the structural adjustments and the structural reform would have already been at first, in the first instance, I think, being tried to put in place after the February 20 budget. Over and above that, we are, of course, in an economy that is now COVID impacted, and therefore it means that we need to reallocate our resources to best respond to the current pandemic, as well as then make sure that the country is able to operate on a platform that will enable it to recover sustainably.
Now, having said that, though, there are still decisions that Treasury makes about allocations and cuts, which would be up for debate here, Sifiso. I mean, does he make good on the February proposal, for example, to cut public sector wages? We know exactly how the unions feel about that. Is there more money going to be given to SAA, for example? So those allocation decisions will indeed affect departments and ultimately affect, I would imagine, the citizen and consumer.
Yeah, I think the allocation conversation is certainly going to be also quite an important one. I think the pandemic, for example, for Eskom, who has probably the largest cross-governmental exposure in terms of its debt and then its risk to the fiscus. That particular SOE had the benefit of having lower demand for energy because of the pandemic, and they had time to work on their plant, etc. And so there's clearly some hope around some recovery from an Eskom point of view. There certainly remain some question marks around SAA and what that implication will be in terms of its continued pressure on the fiscus. But over and above that, I think what's going to be quite important is a continued investment and a continued spend towards social spending. Social resilience is certainly one of those investments that actually contribute materially to the development of human capital. And if we want to have an able labor force, we have to continue ensuring that no one gets left behind and no one gets left on the fringes, particularly on the back of reduced social spending.
So let's bring it back to the actual state coffers. I mean, this country has been in a recessionary state even before COVID-19. The fact that we are unable to generate enough revenue for the fiscus to be healthy leads us to a possibility of us borrowing our way to the IMF. Do you think this afternoon the finance minister will go anyway to show how the economy can increase activity and generate revenue? We know this is adjustment, but really if you speak to business and other commentators, they're saying at the end of the day, if the country doesn't generate revenue, we are on our way to borrowing our way into deep trouble.
No, absolutely. I mean, we know that debt servicing costs were about 13% of the budget, and they're probably expected to increase to about 15% of the budget. And I don't currently think that South Africa is in a desperate enough space to go to the IMF. I think a lot of the structural infrastructure that needs to be in place for us to be able to recover sustainably are still there, and there's certainly no fiscal cliff that is certainly looming for the context of the South African economy. However, taking that into account, we have to make sure that this budget focuses on capacity building for the South African economy. We've seen a lot of capacity being lost, particularly in manufacturing over the last 2 decades. And this, and we saw that the Sustainable Infrastructure Symposium that was held yesterday, and which suggests that probably infrastructure is probably going to be the key focus area coming out of national government now as a key as an approach to catalyze growth in the South African economy. And we know that that's got a really good multiplier. In the context of the South African economy, construction alone has got a multiplier of about 3.25. That means for every rand going into construction, there's another 2.25 rand going into the economy. And I think those approaches towards capacity building will certainly then bring the debt conversation into more of a context that we can borrow into growth, to invest into growth, and not borrow to show up SOEs in the context of the South African economy.
Know exactly how that will pan out at 3 o'clock this afternoon when the Finance Minister delivers his adjustment budget. Sophia Skanjana, thanks very much indeed for your time. So how are the local markets doing ahead of the budget? Market activity at the moment is being influenced more by international sentiment than it is by expectations around the budget this afternoon. More signs of an acceleration in the coronavirus cases keeping investors on the edge. The JSE is following global markets and is deeply in the negative. Gold prices, meanwhile, have surged to their highest level in nearly 8 years.